Hello guys, and welcome once again to my YouTube channel. So I'll encourage each and every one of you to watch this video to the end to really understand how I trade the TTrades Fractal model by doing my analysis on the daily and looking for my changing state of delivery on the H1. You can also choose to do it on the H1 and then look for your changing state of delivery on the M5. So if you really want to master the TTrades Fractal model, these are the three concepts you have to master. You have to master a changing state of delivery, how changing state of delivery is formed. You have to master daily profiles. You also have to master daily bias. So for the daily profiles, we are going to consider the New York reversal and London reversal in New York continuation. I'm going to leave a link in the comment section that is going to teach you guys more about the daily profiles. Or you can go to TTrades channel, go to his playlist. He has an entire videos on daily profiles. So let's first take the changing state of delivery, since most of you do not understand how it is formed. So this is how a changing state of delivery form. When we have a down close candle that goes into a point of interest or that takes liquidity, and then we have a close above the opening. This is a bullish changing state of delivery. Now, before you consider this as a changing state of delivery, you see we first printed a bullish candle before this down close candle. Let me go over it once again. We first printed this bullish candle before this down close candle that went into liquidity, or that went to take liquidity, or that got into our point of interest. This point of interest could be an old swing low, or it could be a fair value gap. So we can get this down close candle into a fair value gap, or we can get this down close candle into an external range liquidity, which is also known as an old swing high or swing low. And then if we have an up close candle over the opening of that series of down close candle, that becomes our changing state of delivery. You should just look at how it forms. We first have a bullish candle before that bearish candle. The same way like this. We want to get a bearish candle before the series of up close candle gets into our point of interest, which could be a swing high or fair value gap, and then we get a down close candle over them. So you should visualize this. I'm going to post it on my Twitter page too. So always when you're identifying your changing state of delivery, for a high or a good changing state of delivery, you have to get this first before that up close candle. You have to get this candle first before that down close candle. Now, places where we look for our swing points to form. We want to look for our swing points to form when price sweeps liquidity. Right, you can see here this was a swing low, price took the liquidity, and then this was our first candle, and our second candle took our first candle, and you could see the expansion. Another place we want to see the swing form is by using fair value gap. Also, we first I did a mistake here. We first want to see a candle target. We first want to see one candle target. That would be the first candle, and then the second candle to the first candle. So this one was supposed to take this one slow for us to trade it. So I did a mistake in this. But if you watch my previous video, I really explained places where we want the swing points to form. And also, this is how you mark the fib. When you identify your CISD, you mark it from the high that produced that manipulation leg, right? You mark it from the high to the low that produced the manipulation leg, and this will be your target. Your first target will be -2 to -2.5, and your second target will be -4 to -4.5. After these targets, you look for liquidity to be in place or to go with these zones. It can be fair value gap, it can be swing high, right? In this scenario too, there was SMT over here, and because of that we failed to take this high, but on the other correlated pair we took this low rather. So on the other correlated pair we took this low. In this scenario, you will still mark it from the high that produced that low, right? But in this situation, you place it on the low that it caused the SMT with, the low that it failed to take. But on the previous, on the correlated pair, its correlated pair took it, right? So if there is SMT this way, you put it this way, right? So now let's get to the video. Now for our daily buyers, when you have your previous candle this way, and the next candle takes the previous candle high and closed outside it, we know that for a bullish candle, this is how a bullish candle forms. It first opens here, print a low, print a high, and it closes, right? This is the candle anatomy. So when your bullish candle prints and then it closes over the high this way, we expect the next candle to take this one high. If the next candle also if your next candle also takes this one high and closed outside this way, then we will expect the next candle to take this one high, right? In a situation where the next candle takes the previous candle high and closed inside, then we will expect the next candle to take this high, right? So when are we going to avoid it? We avoid it when we have a large candle, right? When we see a large candle like this, like what I showed in my previous video, the next candle might consolidate. And also when we see 3 consecutive expansion this way, the next candle might consolidate. So let me demonstrate this on the daily time frame. Let's see how it will go. Let me just choose any random pair. Let's choose USD So anytime you come to the chart, you first have to profile the market. If you have to make sure that it is not consolidating. If it is consolidating, then you do not have to trade it. And if you do not know the cycles of markets, the cycles in the markets, you can go to ICT's channel. You can just, there are many videos on it, right? So when you come to the chart and we look at the present leg, we could see that it took the previous candle and then closed inside. And what did I say? When it happens that way, then we expect the next candle to come for this one's low, right? So let's see. So we could see that it came for that low. So since this one took the low and closed, because there is a bearish candle, so how do bearish candle form? They open here, they form a high, and they closed here, right? So it closed here. So we expect the next candle to come for this low. We came for that low. Now we took it and we closed inside, and we could see that we took this swing point here, right? We took this external range liquidity here, right? So and then it also took the previous candle and closed in that. We expect the next candle to come for this. Let's see what will happen. The next candle didn't take the high or the low, so we will see what the next candle will do to continue. This other candle too didn't take the previous candle high or low, so we move on to the next one. And when you see a large candle like this, I will not consider trading the next candle since it is likely to consolidate. And here it didn't take anything, so I'll still be waiting. It still didn't take anything. So we took the high and closed inside. So I expect the next candle to come for this. And then it came for that. It took the low and closed. So I expect the next candle to come for this high. And it won't work all the time, right? It won't work, nothing is 100%. It took the low and closed. So and closed outside. So we expect the next candle to come for this. And it came, it took it and closed inside. I expect the next candle come for this high. And then it, so that is how we are going to do it. That is how we are going to trade it. So now I'm going to demonstrate a trade I wanted to take today, but I didn't take it. I want to explain it, use it to explain to you guys. Okay. So when I came to my chart, this was Wednesday, right? You could see that Wednesday, and I first profiled the market, okay. You could see that Wednesday took the previous candle's low and closed inside. So what do we expect? We expect Thursday to do what? To expand and take this high, right? You could see Thursday took the high, all right. But the T-trade model, as I said, it starts with a swing point, and we could see here that this was our first candle and this was our second candle. Our second candle closed inside, so we expect our third candle to expand. So what do? We go on the 1 hour time frame, and then we mark the new candle formation, right? And I said that a new candle point at 5 p.m. EST. My time is in EST, so 5 p.m. EST. So Tuesday candle ended here, 5 p.m. EST. And Wednesday candle opened. Wednesday candle also end at 5 p.m. EST. So at 5 p.m. EST, Wednesday 5 p.m. EST, this is for Tuesday. You can see Tuesday, Thursday. Thursday will also end at 5 p.m. EST. So Thursday ended here, right? And you could see it, right? You could see our Wednesday. So I first, this was when the Wednesday candle took the high. So I will look forward to maintaining state of delivery. I saw maintaining state of delivery here. You could see there was this. Let me zoom. Guys, sorry for this notification. You could see this candle before this candle came down to sweep liquidity. When we get a close over it, it's our change in state of delivery. So after confirming this change in state of delivery, what do? I mark the low to the high that produced that low by manipulation. It was this high that produced it. Where will be my target? My first target will be -2 to -2.5. My second target will be -4 to -4.5. After that, what do I look for? You can go back. When I was beginning the video, I said you will look for liquidity to be in line with your zone. So we could see fair liquidity here, which is a high. And also you could see there was liquidity here too, and there was this liquidity here that went to the -4 level, right? So after that, what do we do? What do we do? Can you guess it? We mark our candle. So this is how the T-trade market. Although in my previous candle I said you mark it from the opening to the low, but the T-trade fractal model will just mark the, regardless of how the candle forms, it marks it this way. Right? Just mark it this way. So it just mark it in the way like premium and discount, So we expect the next candle to respect the zone. And what do? We mark our T spot. Where is the T spot? We mark it from that 5%, 50% to the opening of the new candle, right? To the opening of the new candle. So here will be our T spot, right? And that is where we want to see the wick fall, right? Okay. So right now, if I'm looking at this trade, when am I going to trade it? I usually trade during New York, right? I don't trade during the London section. New York section is the easiest section to trade. So I was waiting to trade it. Looking at my sections, we could see New York consolidated, London manipulated it, and then it consolidated a little. We could see New York expanded, right? Now I didn't trade this. Why didn't I trade this? So if I was to trade the New York session, I'll wait for price to sweep liquidity and then form a change in state of delivery on the 50-minute or the 30-minute, right? So when landing did this way, I will leave a link in the comment section to explain the daily profiles to you guys. I wanted to find out if this was landing Judas, right? If this is landing Judas, then it means New York is going to reverse, because if you want to see a bearish candle and landing didn't give us reversal, then New York is going to give us reversal, right? So I wanted to see if this was landing Judas, and I don't know why I'm getting this word. I'm not able to pronounce this word well. So if this is Judas, then it means that New York is going to what? Is going to reverse, right? So I looked here to see that landing didn't hit. It becomes a Judas when it doesn't get into any point of interest. I realized there was no point of interest here. So I compared it to its correlated pair, which is NZD USD, to find out on NZD USD there is no POI that's landing tag, so that I can confirm that landing is Judas and look forward to trade the New York. So on on the let me go it this way, on NZD USD I saw that landing got into a point of interest, right? So landing wasn't the Judas, it got into a point of interest. That was here, you could see the point of interest. It correlated pair got into a point of interest. So since it got into a point of interest, also if you understand this, I'll leave a link in the comment section. It explained the different kind of daily profiles. You can go and watch it and get what I'm trying to say. So since it got into a point of interest, this wasn't Judas. It wasn't landing Judas daily profile. So I didn't trade New York. Even if I was to trade New York, let's say if I was to consider this fair value gap for New York to come in, because I said our daily state of delivery can form when we get into a point of interest like the fair value gap, or when we get into a change in state of delivery or another block and form a proportion block, or when we take a swing when we take a swing what a swing low or a swing high, right? So even if I was to trade in New York, I don't use the 5 minutes, I use the 15 minutes to confirm the change in state of delivery. Even if I was to trade this, I realized that when New York opened and we came into I realized that this would have been my change in state of delivery. You could see price was even failing to close over it. Price failed to close over it. Price took another liquidity. So I was waiting for price to even close over. Then you could see price it didn't happen, right? So even if I didn't know this and I was even to trade it, it still wouldn't have given me an entry. And also, um, when I posted my market section, people were talking, people DM'd me on Twitter and they were complaining and stuff. So it is absolutely okay to use ICT's timing. So I use the ICT timing in this video, where London opens from 2 to 5, New York opens from 7 to 10, and Tokyo opens from 8 p.m. to midnight, right? It is absolutely fine to, use the ICT time. So use the ICT time if you feel comfortable with it. So anytime you want to trade on the 15 minutes, 5 minutes, on the 50 minutes or 30 minutes, you have to always remember to mark your New York opening, right? Which will be the midnight opening. So this would have been our New York opening. You can see landing with the high and the New York expanded. So this was like landing reverse, and this was the landing Judas course on it correlated where it got into the point of interest, right? So if you do not understand anything, I would advise you watch my previous video. The TTrades model always starts when the second candle takes the first candle low and closed inside. And my daily buy, as I said, if it closed like this, then we expect the next candle to do what, to come. And you see, it came for the high, right? Uh, this one closed, so we expect the next candle. You see, the next candle came for it. So if you have any question, you can ask in the comment section. And if you didn't understand, go over and watch the video again. Watch it until you understand. You don't have to watch a video once and expect to understand everything in it. Watch the videos, and also the links that I'll leave in the comment section. Click on it. Don't be lazy. Click on it. Go and watch it, and also backtest what I'm teaching. Backtest it and thank me later. Thanks for watching. Don't forget to subscribe.